Welcome to the Edgevana Podcast, where we illuminate subjects in the IT infrastructure space. Get ready to hear some amazing insights from outstanding individuals that will change the way you think about IT. And now, here's your host, Mark Thiele.
Welcome to another edition of the Edgevana Podcast. I'm your host, Mark Thiele, and joining me today is Ed Featherston, technology evangelist and former distinguished technologist at HPE. Ed, it is so great to have you on the podcast. I can't believe I've waited this long to get you on. You and I have been sharing banter and occasional drinks for what seems like a decade now, and it's really a pleasure to have you.
Thanks for inviting me. I'm looking forward to it. Always enjoy our conversations. And like you say, it feels like it's been forever. It's also been forever since we've actually seen each other face to face.
Yeah, sadly, the 2020 and now 2021 aren't helping us very much.
2020 doesn't exist. It never happened.
Yeah, pretty much. Jesus. So, you're going through a bit of a change. What can you tell the listeners about what's going on with Ed these days?
I've been in the consulting biz for about 3 decades now. My most recent working with CTP, who was acquired by HPE about 4 years ago. I'm making some changes in my journey. I'll be joining another organization. I'll be announcing it next week, helping them with their digital transformation and hybrid cloud journeys. Really looking forward to it and really excited about it. As much as I love the consulting, it's time to kind of stay in one place for a while. I'll still be out there in social media pontificating, but it's time for a change, and I'm really excited about making that change.
Well, that's awesome. I can't wait to hear the news and about this lucky new organization you'll be joining. So fantastic. So we talked a little bit before scheduling the podcast about the market around blockchain, and there are the common questions that are bantied about on a daily basis. Is blockchain have to mean crypto? Is blockchain ready for business yet? Are people that pontificate about blockchain trying to make it fit everything when it really has some key opportunity areas that should be your central focus? So all of those things and more, but we obviously can't touch on all of them. So what I want to get is for the audience, get your position. I mean, you're one of the foremost thinkers and doers relative to blockchain on the market today. Tell the audience a little bit about what your position is and where we are in the maturity of blockchain usage.
Yeah, I appreciate that. I started looking at blockchain. Part of my role in my various consulting organizations has always been trying to look out into the future as to what technologies we should be looking at that could have impact on our clients. So I first started looking at blockchain. It's going to be about 5 or 6 years ago, and found it a fascinating technology, so much more than what it gets played out as, with lots of potential. Sadly, like any new shiny new toy technology, everybody tries to fit it into every particular use case scenario.
Right.
Adding into that challenge, and it was interesting. 5, 6 years ago, one of the biggest challenges I had in discussing blockchain was getting people to understand that blockchain does not mean Bitcoin. All the other cryptos didn't exist back then. It was just Bitcoin. And getting them to understand that Bitcoin needs blockchain to operate. Blockchain does not need Bitcoin to be useful.
Right.
And we were just starting to come out of that tunnel when the crypto craze started up. Yeah. And everybody started having their versions of coins and cryptocurrencies. And it just went absolutely crazy. And I'm back to getting people to understand that blockchain is not just crypto.
Right.
And crypto could be another totally 5-hour discussion about crypto and the pluses and minuses on crypto. Blockchain itself, for people to understand, it sometimes gets overly simplified by saying it's just a distributed ledger.
Yep.
It's more than that, because it's an entire ecosystem that can support certain types of use case scenarios and provide value that isn't there today.
Right.
The way I usually describe it to people is if you have a use case scenario that has chain of custody involved in it, and I always liken it to the old police procedural shows. Everybody understands chain of custody. I need to be able to know every handoff that happened with something.
Yep.
Chain of events, every event that happened to that something, and I need to have a fully audible trail of that cannot be modified or changed.
Yep. Yep.
This is one of the big things about blockchain is that it's immutable. Once a transaction's in there, it never leaves. And then the final thing I use as kind of a rule of thumb is if there's multiple stakeholders involved, because blockchain at its core is a peer-to-peer distributed system. There is no central authority. There is no gold copy database. Everybody has their own copies of all of these immutable transactions.
Right. No, and it's obvious that there's a lot of, well, I shouldn't say it's obvious. It would seem obvious that there's a lot of potential value in being able to do that. And kind of is just in your first answer, I've come up with so many new questions. I'm going to try to just pick 2 or 3. In looking at the blockchain, why should a customer, a potential user of blockchain for an enterprise objective, why should they look at one versus another? What are some of if you had to pick the 3 to 5 things that make one blockchain strategy differentiated from another, what would they be?
Well, again, and you and I have the conversations all the time around technology in general. It's a matter of figuring out what your business scenario is and what you want to get out of it, and then figuring out what technologies might help it.
Right.
I've heard plenty of tech people in there write that you could build a blockchain solution without blockchain. You could build a application solution that solves all of the needs, hitting those points I was talking about of chain of custody, chain of events, immutability. You can build all of that. There's nothing that stops you from building all of that. But then you have yet another custom solution that in having multiple stakeholders involved, getting them all to buy into that custom solution starts becoming a challenge.
Right. Makes sense.
So, and it's like, for me, no technology is ever a silver bullet. No technology is perfect for what it does. Blockchain, to me, because of that underlying ecosystem, saves you a lot of effort. Similar to, I liken it to the internet. Nobody talks today about that. I build my application to work on the internet.
Right.
It just, it does. Quite honestly, I think when blockchain finally hits its stride, we will stop talking about the fact that it's the underpinning for these things. It's just going to be there. It's another ecosystem that things are built on top of, and nobody thinks twice about the fact that, oh, hey, I'm running on blockchain. I'm great. I'm wonderful, and those kinds of things.
Right. I mean, you could even argue that that's slowly beginning to happen in the cloud space, right? Where different application or solution providers have stopped spending so much time talking about that their automated phone system is run in the cloud, because nobody gives a crap whether it's run in the cloud. What they care about is what opportunities you can represent via how it's built and how it's installed.
Right. I mean, in the business use case scenarios, use cases that I say might benefit from blockchain. One of the big ones to me is supply chain.
Yeah.
Supply chain hits those categories big time, and supply chain suffers greatly from multiple data entries of transferring data from one person's system to another person's system, and gaps in both chain of custody and chain of events that are happening to those supplies from beginning to end. It's one of the reasons, IBM has been playing big in that space for blockchain on that because of that. Other things that I see in the public sector is record keeping, registry of deeds for properties and everything.
Sure.
Chain of events on those and chain of custody on those is critical. And how many people, when you go out and you go buy a house, one of the first things you have to do is buy title insurance, because no matter how much searching everybody does, they can't guarantee that you actually really do hold the title when you buy the house.
Right, right.
In today's day and age, to me, that is just a ludicrous proposition.
Yeah. Well, it'd be interesting to see over time how that dynamic affects things like, somebody puts a will in place. Let's say I put a will in place, and right now I wouldn't have to have, because I'm already not mentally capable of doing my own will, so I'd already have to have some support. But in the off chance that I was mentally able to do my will, but 3 years from now I hadn't updated my will and I'm not mentally capable anymore, there would be legal discussion about how to manage the original wishes in the will, especially if those wishes had changed at all in the intervening time. It'd be interesting to see how that problem space potentially mixes with something that is as not final but definitive
Yes.
as the chain of events that would be recorded via some kind of blockchain strategy.
Right. I mean, then other areas that are being looked at, to me, is like a variation on supply chain, is provenance of items, of
Yep.
guaranteeing that I know this item came from this location.
Right.
The diamond industry is looking at it big time to help deal with the blood diamond industry of all of the illegal diamond mining that is occurring, and being able to guarantee that they can trace exactly where the diamond originally came out of the ground all the way till when it gets into your hands.
Yep.
Kind of thing.
Yep.
And what of that kind of translates into, you and I have discussed before, variation of that is when you start getting into the Internet of Things.
Yeah.
And all of the devices out there, of being able to track the provenance of those devices that need to be able to talk to each other, but you want to make sure they're allowed to talk to each other.
Right.
Am I really talking to the device I think I'm talking to?
Well, and the potential ability, I mean, obviously, since we talked about this, you know that I'm as concerned about this space as you are, and other folks that are in the know relative to IoT and security and risk mitigation, et cetera. It just seems like blockchain as almost electricity, for lack of a better description, as opposed to some heavy-handed application that has got policy and governance and manually entered information, et cetera, would be a big advantage in that space.
Yeah, most definitely. And then, I mean, one of the big areas of blockchain that is still really being explored is the whole smart contract capabilities that are built into it. Because we talk about the immutability of the ledger itself, but smart contracts introduce all types of new potential use case scenarios on it. And one of the toughest discussions having with people about that, especially technologists, is when you talk contracts, technologists tend to think about the technology level, API contracts. I make a contract and this is what the API is going to look like.
Yep.
Smart contracts are legal contracts written in code, written and executed in code, which is a very different kind of animal than API contracts are. But it does introduce a variety of potentials out there of executing contractual arrangements as part of that supply chain or part of something else. I mean, one of the simplest, easiest examples I've used with people is in the music industry. Right now, when a composer gets their contract for getting their money for the song every time the song is played, wherever it's played and everything. In today's world, they have to wait and trust for the particular music bigwig organization to give them their monthly statement of here's how many times it was played, here's our overhead costs, yada, 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 with no visibility into the actual realities of it. There are a lot of pilot programs out there where every time the song is played, a smart contract is executed and the money is immediately sent to all of the parties that are part of that contract and their percentages for each time that song is played as a microtransaction. They have full visibility into every song, into every time it is used, and that they are getting their money providing a much better level of visibility and trust into how that is all executing.
Right, right. No, in fact, it's one of the questions I was just going to ask you when you brought it up about smart contracts. And I see the potential demand and opportunity for smart contracts exploding with the advent of Edge, and just with the wider demand for technology resources, let alone any other part of the market. I mean, I could see smart contracts being a part of the logistics supply chain, helpfully managed with blockchain. So this is all good timing from a maturity standpoint.
Very much so. And one of the things I find interesting with the smart contracts, because like I said, we're discussing, they are actual legal contracts written in code.
Yeah.
So it's creating a whole new job category out there called legal engineers.
Right.
These are lawyers that are learning how to write these contracts in code.
Wow, seems like, sorry, I cut you off, but it seems like a whole new opportunity space in low code, no code.
Yes, and absolutely, because the reality is, I had actually written about it a few years ago. Of do we need to think like lawyers now when we write this code?
Yeah.
Because it's one thing to be writing your code and looking for bugs and everything, but now you have to be also looking for legal loopholes in the contract.
Right.
That could get taken advantage of because it is a legally binding contract.
Yep.
The best example I give to people was the nightmare that happened to Ethereum when they had that huge, everybody referred to it as a hack.
Yep.
And everything for just a DAO offering, but it wasn't a hack. It was the person looked at the smart contract, saw a loophole in the contract, and just executed that loophole. It wasn't a hack. They didn't do anything to the code. They took advantage of a hole in the contract.
Right, right. No different than you would if it was written on a piece of paper.
Exactly. Yep. It's just that it happened a lot faster and had a lot more impact because it's being executed instantaneously in the blockchain ecosystem instead of going through the normal legal rigmaroles and court rooms.
So, sort of like what we see happen on Wall Street now, where the hint of news can make trillions of dollars transact before the average human even realizes that something has happened.
Right. Why they started to have to put all those circuit breakers in there, because the auto trading rules start kicking in and they could create more of a problem than they solve in the process because they're happening so much faster than people could react to it.
Yeah. Yeah. So, one of the biggest complaints that, idiots like me, at least, have said or heard about blockchain over the, past 5 years or so has been around the notion of its inability to handle transaction performance at scale, and comparing it to somebody like Visa or something like that. Do you still see that as a roadblock for some blockchain, for all blockchain, or do you see that as something that is more just likely to be solved with time?
It's something that's being solved. I think there are going to be specific implementations that help deal with that. The biggest thing that creates that challenge, because the blockchain is a distributed peer-to-peer system, you have to have a mechanism for achieving consensus on the transactions as to what a valid transaction is that goes in, because there is no central authority. So you need a mechanism to do that. The mechanism that a majority of blockchains started out with, because the Bitcoin one was called proof of work, which requires somebody to solve a mathematical puzzle, and the first one to solve it gets to okay the transaction, and they got a piece of Bitcoin back for it. So this ensured the integrity of it. The problem is that took time, and doesn't scale well for high volume transactions. It also consumes a huge amount of resources in order to be able to do it. And that's been one of the complaints from a green perspective, that kind of consensus model draws a lot of electricity and resources and compute cycles and storage to execute on. So there are lots of other different consensus models that have been started to be implemented to help deal with those challenges and increase the performance. Like
Right.
everything, and one of my favorite phrases, everything is a trade-off.
Yep.
Each of those consensus engines, you're trading something off in order to gain the transaction speed.
Yeah.
Um,
Yeah.
and you're trading some of the distributed autonomous type of features that purists of blockchain say makes it not a blockchain anymore.
Right. Right.
The purists of blockchain want everything to be totally decentralized, no matter what, and there shouldn't be memberships. There shouldn't be any type of level of control. The reality of the world is that's not how things work.
Yeah. Yeah. So
Um,
true.
I mean, a good example is the Bitcoin network itself. The Bitcoin in the way that's all set up is entirely anonymous. In the financial world, because of regulations, you can't have that. You need to know your customer. You need to be able to identify who is transacting that business. No choice in the matter. So that, in order to use it in the financial service industry, you have to put some of those limitations in, because you have to know who it is that is actually executing the transactions and receiving the value on the other end.
No, that makes a lot of sense. So if I were to, and you know me, I get on my high horse about, public cloud versus private cloud,
Yep.
or on premises and shit like that, and to some degree, I'm just being a dick and trying to make people think. And in other cases, it's, valid concerns about assumptions people make. But when it comes to blockchain, if you were to, assuming, the world was equal, and I know it's not, but if you were to sit down with me or some other exec and say, you should build your own, or you should buy from someone, or you should use what one of the cloud providers is offering or something, understanding that it still has to be fit to purpose. Where do you think we are relative to people needing to roll their own, or people should be buying from others?
Right now, it's still more of people rolling their own than buying from others. All of the, I mean, as you mentioned, cloud, all of the cloud providers offered a blockchain as a service capability.
Yeah.
And it was a classic, if you build it, they didn't come.
Right. Right.
They put it out there as a capability, and I thought it made a lot of sense. Unfortunately, I don't think people were ready at the level where they were ready to consume it as a platform yet.
Yeah. Yeah.
So that they're still kind of rolling their own and building their own. Quite honestly, 5-6 years ago, when I first started talking about this, I expected it to be at a higher maturity level than it is. It's moved slower than I originally expected it would. It's still moving forward, and I think that capability is eventually coming, but I don't think it's reached the level of maturity where people are willing to take that platform as a service for blockchain and just go run with it.
Right. Right. Makes sense. All right. So, what do you see as like the impact, good, bad, or otherwise, of and we sort of talked about this at the beginning of the podcast, of all of the different coins hitting the market. Since blockchain doesn't have to include crypto, but crypto is dependent on blockchain.
Yes.
Do you see crypto, the rash of crypto hitting the market, as potentially helping us to accelerate the introduction and use of blockchain, or do you see it as diluting the market of opportunity?
Quite honestly, I see it more of a hindrance than as of a help, for a couple of reasons. The first one is crypto ends up sucking all the oxygen from the room.
Right.
I mean, all anybody ever wants to talk about is crypto. What's the latest coin out there? What's the valuations, and how much money is everybody making, and why didn't I get into it sooner, and kind of things. And that it makes it harder to have the blockchain conversation.
Right.
The second problem I have is, for all the people that are not crypto enthusiasts, they look at crypto as some type of long-term scam associated with blockchain, and then say, well, I'm not interested in blockchain because I don't want to deal with that crypto world. I think that crypto world is crazy.
Right.
So it ends up creating, to me, more problems than solving them for blockchain, because it ties them too closely together and doesn't let people think about how can I actually leverage this without being involved in the crypto world.
Yeah, well, that makes total sense. And to be honest, I kind of expected that answer, but I was hoping, that you were going to say, "Oh no, Mark, this is great. This is, this is, bringing more visibility to the technology, and it's going
Well,
to accelerate its." Yeah,
I will firmly admit, and it bothers a lot of my other friends out in social, I am not a fan of crypto.
yeah,
Because to me, crypto isn't currency, it's commodities. It
right,
trades like commodities on the commodities market, which I've spent many years working in, intimately familiar with.
yeah,
I saw one person comment recently on one of my posts about it, and I think he hit the nail on the head. He said, given the instability of Bitcoin, he says, how do you price something in Bitcoin?
right,
Because the value of Bitcoin fluctuates so wildly on a daily basis. How do you
yeah,
say this is worth one Bitcoin when today one Bitcoin is worth X number of dollars, tomorrow that Bitcoin is worth 10 times less or 10 times more?
yeah, yeah. Basically, we need little digital screens on every product that says your product is worth this much Bitcoin
Right,
today.
right,
Yeah,
right. And
maybe
if you
even this
sign,
hour.
yeah,
Yeah,
I mean, in all the businesses that say we accept Bitcoin, yes, they accept Bitcoin, but they do not price in Bitcoin.
yeah, yeah,
They price, usually in US dollars, and then whatever the Bitcoin exchange rate is at the point of your purchase, yeah, we'll take it and we'll do the exchange and we'll take a little off the top because we're doing basically an exchange rate here. And so,
yeah.
like I say, and I know there are people that are real fans of it, and all the power to them. I got no use for it.
Yeah, no, I'm pretty ambivalent. I haven't done any investing in it, and just that word alone should be cause for concern for many. Is that you're looking at it as an investment and more like a gamble.
Right.
I
Like I say, I mean, commodities are investments.
That's right, and I just
They're high risk investments.
right, right, and I struggle with the notion that it's like, okay, I'm investing in pork bellies,
Right.
but somebody could instantly create another whole pork belly market. And how do I then value the market for pork bellies today if tomorrow there might be another pork bellies, but it's pork belly A or pork belly, XYZ.
Right.
And so the notion that any one cryptocurrency is worth X dollars at any one point in time, I haven't seen anyone anywhere attempt to evaluate what a Dogecoin is worth today versus what it's worth tomorrow because Bitcoin went down or Bitcoin went up.
Right. That's
Or
it.
because,
And that's one of the things in the crypto space is, as much as they are not physically connected to each other,
yep,
just like anything else in the financial market space, perceptions impact value.
right,
And if one of the big ones goes down, it tends to bring the other guys with it, whether they really needed to or not. Just like in the stock market, if there's a hit on a large cloud company per se, all of the cloud companies will take a hit,
right,
even if they weren't involved in whatever caused that first hit to happen.
yep,
The cryptocurrencies the same way, and we've seen it happen where Bitcoin suddenly takes a hit and everybody else drops along with it.
And what's interesting, I mean, and unfortunately we're going to have to wrap up, and I
Yep.
hate it because this is such a great conversation. What's interesting is that in the cloud market, that potentially makes sense, right? There are so few cloud companies and they're all bargaining for the same market. And if one of them appears to be doing worse business-wise with no explanation, like they didn't have a 3-day outage or something like
Right.
that, then you could make assumptions that maybe the market as a whole is weakening, right? But in real terms, if Bitcoin goes up, I should assume that all the other coins are losing value.
Mm-hmm.
I should be able to assume
Right.
that because there's an infinite number of potential coins on the market, and it's counterintuitive to assume that all of those coins should go up because somebody found value in one of them, when it's just the opposite. Every time a new coin gets added, every other coin should lose value, in my opinion, right?
No, absolutely. I mean, look at the craziness the last few months in the stock market when those Reddit users started just doing huge buys on certain stocks and caused a company that really had no valid market value anymore to suddenly go up through the roof.
Yeah, yeah.
To me, it's the same thing. I mean, the coin market operates the exact same way. It's what people perceive the value to be that particular day, and they just ride on it and hope to hell they get out before it crashes.
Right, right. Well, Ed, this has been fantastic, and as I knew it would be. And I really appreciate you joining my little podcast, and hopefully we can do it again sometime soon. And I want to hear more about your new gig as soon as you can share it.
Yep. I'll be announcing it on Tuesday.
Oh, awesome, awesome. And in the meantime, for those who'd like to, follow your ravings and rantings, where would they find you?
They can always find me on LinkedIn and Twitter. Twitter is E Featherston, and my LinkedIn, just look up my name, you'll find me. I'm very active in both of those social channels, and I'm always open to people asking me questions and reaching out to me. So don't hesitate to pose questions to me in those medias. I love, as you can tell just from this conversation, I love talking technology with people. So.
Yeah. No, I would highly urge anyone who's interested in anything we've been talking about, or for that matter, many other areas of modern technology, to give Ed's social platforms a whirl. That'd be worth it. So thank you very much again, Ed, and thank you for everyone for listening. And until next time, this is the Edgevana Podcast with Mark Thiele.
Thank you for listening to the Edgevana Podcast. Be sure to subscribe to the show on your favorite podcast listening app or on YouTube. To learn more, visit www.edgevana.com. Thanks for listening, and be sure to join us on our next episode.